So in this video, I want to look at why reinvesting dividends is a smarter strategy for long-term investors. Why is it a smarter strategy for long-term investors? Number one is compounding growth. Compounding growth. So there's this exponential increase in shares. When you reinvest the dividend, it gives you that ability to purchase additional shares, which in turn will then generate more dividends. So over time, this creates a kind of compounding effect where the reinvested dividends help to accelerate the growth of the overall investments. So long-term wealth building is also an integral part of it. Long-term wealth building. The reinvestment strategy maximizes the power of compounding, particularly when done consistently over many years. As the number of shares increases, the total dividends income also grows, resulting in greater potential returns. So consider increased number of shares, consider increased dividend paid out. You have it will enhance the level of compounding in the shares, in the stock you bought, in the company you bought. Number two is a lower average cost per share. So it incorporates dollar cost averaging. So in this case, as you reinvest your dividends, you buy when prices are high. You also buy when prices are low. You buy when prices are at the middle. So you are incorporating dollar cost averaging. You buy consistently over time by investing, the amount coming in as dividends. So you also purchase during market dips. As the market dips, you also have an opportunity to buy. If the dividend is paid out when the market is down, you also buy at a lower price. You participate and you purchase during market dips. Number three is no need for additional capital. You don't need additional capital because there is automatic reinvestment. When the dividend comes in, the system is like programmed to reinvest your dividends for you. So you reinvest automatically. You don't need to inject additional capital to buy shares. And then there's also reduced transaction cost. These plans most of the time is done at no fees, at no commission. Your broker will not charge you any commission for dividend reinvestment plan. As the dividend comes in, it is reinvested without fees, without commission. So that attracts, and a kind of overall, so it's an overall cost advantage in this aspect. Number four is a potential for higher total returns. It would maximize your dividend earning. The more the number of shares you buy over time, you accumulate over time through this particular dividend reinvestment plan, you discover that it would maximize your dividend income. If you started with maybe 1,000 units of a particular shares, over years you may accumulate as much as 4,000, 5,000 units. You discover that your overall dividend will keep on increasing, and there is tax efficiency also. In some cases, reinvesting dividends may be more tax efficient than taking out cash payouts, especially in a tax deferred account like an IRA or a 401k, where dividend growth, where your dividend will grow tax free. There is tax efficiency when you use a tax deferred account. Please don't forget to like this video and then subscribe to this channel. It will motivate me to keep on bringing contents of this nature to you. And don't just listen. Please try to implement all what you are going to learn in this channel. My desire is to make you, a professional investor. I've been investing for the past 18 years. So I'm just trying to, by God's grace, pass my little knowledge to you. And as you gain knowledge, you'll be able to have better performance in the market, because the more you learn, the more you earn. The stock market is a knowledge-based endeavor. Only the knowledgeable will win. The stock market is the place where billions are made and lost every day. So you want to avoid the losses and be among those who are making it, you will need knowledge. Knowledge with a capital K. All right, that's by the way. Number 5 is ideal for long-term investors. It's ideal for long-term investors. For those who are focusing on growth, your desire is to see growth, tremendous growth in your portfolio. So for long-term investors, reinvesting dividend supports a strategy of capital appreciation and wealth accumulation. The focus on reinvestment helps keeps the investment growing without the temptation to use the dividend for short-term spending. So because everything is on auto mode, automatic mode, so you cannot use the money you cannot, use your money to spend anyhow. As dividend comes in, it's reinvested. As it comes in, it's reinvested. So there's no way you could just collect the money and go and spend it, like that. So this reduce, short-term distractions. Reduce short-term distraction by reinvesting dividends. Investors avoid the potential pitfalls of focusing on short-term payouts. Instead, they concentrate on the long-term potential for their investments. They concentrate on long-term potentials. So you avoid short-termism, short-term activity, short-term trading, short-term actions. Number 7 is some higher dividends in the future. This dividend growth, that's a very important part of the entire strategy. As the number of shares increase through reinvestments, the total dividend payouts will grow over time. As we keep on investing in buying additional shares, you discover that over time there will be a higher amount coming in as dividends. So this creates a positive cycle where higher dividend leads to the purchase of more shares, which in turn generates more dividends, and by so doing, amplifying your returns. It amplifies your results. It's a very nice plan, but it's only meant for those who have a long-term perspective. Long-term perspective. It's not for short-term investors or traders. We invest for 5, 10, 15, 20 years, all things being equal, and the company keeps on doing very well. You have, that benefit of compounding. I think it's something worth considering.